Welcome to another Couch Chat with John Ring, our mortgage expert, one of our mortgage loan officers here at the credit union. And John, we've been talking about the mortgage pre-approval process. It's something that members oftentimes maybe get a little bit confused about. It's very different than other loans that we put together for members, and very different in general from how the loan itself is approached from start to finish. So we've talked about credit, and we're going to talk about income, but today, this video, we're talking about down payment. And I guess when we think about a house, you've got a foundation, you got walls, you got a roof. So we've said that credit is your foundation and what the loan is kind of built off. Down payment is very much as important, if not in some cases maybe more important, than what your credit profile looks like. So can you talk to us? I know there's questions about what is an acceptable down payment.
Sure.
And what can that money look like? So you mind explaining that a little bit?
Sure. The first thing you need to know is that for most mortgage lending programs, you're going to need down payment. And that's got to come from you. It can't come from the seller. And there are various sources that we can use for that down payment. There is an exception out there. If you're a veteran, the VA loan is 100% financing. But most other loan programs require either 3, 3.5, or 5% down, depending on whether you're doing the conventional or FHA loan program. And we can get into those details later when we're sitting down talking about what a good option is. But you're going to need some down payment money. And the underwriter is going to look at that and say, where did that money come from? So we like to see what we call seasoned money in the bank account. We're going to go back 2 months. And if we see a large deposit, we're going to try to verify where did that money come from. So cash is completely unacceptable. A lot of folks don't realize that when they get in the mortgage process. Some folks save money at home, or they get sort of a payback or a gift from a friend or a family member, and they don't understand how critically important it is to precisely document where the money is coming from. So if you've got plenty of money in the bank and you're adding to it out of your paychecks and it's slowly building over time, that's fine. There's no problem with that. But when an underwriter sees $500 or $1,000 or something like that dropping into a bank account, the radar is going to go off and they're going to say, where did that money come from? That doesn't mean you can't deposit money as long as we can source where it's coming from. Legitimate sources are going to be a tax refund or a bonus. Those kinds of things are perfectly fine. What's not acceptable is a cash deposit or money from a friend, and the seller can't kick in any money to you. So beyond the down payment, you're going to need potentially closing cost money. A lot of times a seller can help with that, and that's a lot of times how we get folks in a home with that minimum amount of 3 to 3.5 to 5% of the purchase price. Let's use $100,000 as an example. If we're doing an FHA loan, we need 3.5%. You can literally get into a $100,000 home with about $3,500. More is a little bit better if the seller agrees to pay your closing costs. Now let's talk about source a little bit. I'm going in a little bit out of order, Tim, but let me go back to what that money can be comprised of. Let's say you don't have the money in the bank right now. What other options do we have? Do you have a bonus check coming? Do you have an IRS tax refund coming? We can look at your tax returns and anticipate that and then document it when we see that direct deposit from the IRS. We can use a bonus check. Hey, if you're sure you're going to have that bonus check at the end of the month, we can pre-approve you anticipating that. The other thing that you might have access to is a 401k. You can use a loan or even a withdrawal in certain cases. That's between you and your employer to work that out. But to us, it's acceptable. And you can get a gift. A gift is something that's not paid back. It's not a loan. And that can be from an eligible family member, such as a parent or grandparent or son or daughter. They sign an affidavit, but you know what? We've got to look at mom's bank statement. We've got to have a copy of that. And so just be prepared to tell your mom, your dad, your son, your daughter, your grandmother, hey, just so you know, the lender is going to need a copy of that bank statement. And then they can write you the check and put that in the bank account. We see that done a lot of times. And again, between maybe using your 401k, using a gift from a family member, relying on the seller to kick in on the closing cost, you can get into that house, you know.
Interesting. So I guess I thought it was interesting. You said in some cases 3.5%, 5%. It seems like a common misconception is you have to have that 20% down
Right.
out of, not out of pocket, out of bank account or out of whatever that seasoned money would be. But in a lot of cases, you're not looking for 20% necessarily. Maybe the more the better, but
Yeah, I mean, if 20% down is the magic number in terms of you're going to get the best rates, you're going to get
The
a
best
clean
deal.
loan without PMI or MI mortgage insurance. When you put less than 20% down, you're going to have to pay mortgage insurance. That's monthly added to your mortgage statement, your loan amount. So that's an insurance premium that you pay, and that covers your default. When you put less than 20% down, it's just the fact that you're a higher default risk. So there's always mortgage insurance, whether it's on an FHA loan or a conventional loan. Sometimes it's baked into the rate, so they just charge a higher interest rate. And there's all kinds of permutations of mortgage insurance, and we have good, thorough discussions with folks about what their best options are in that regard.
perfect. Another question that we get pretty regularly is that a lot of times people think that down payment money is all they have to have. What does that down payment cover, and what are some other items that might come up as part of the mortgage process?
Good. That gives me an opportunity to clarify a little bit more. The down payment is just whatever the requirement of the loan is. So on a $100,000 house, FHA loan requires 3.5% down, $3,500. But there's other things, as I mentioned earlier, down payment or closing costs and prepaids. So really, if I were to go back and break it down a little more clearly, Tim, you need funds to close a loan. You need down payment, closing costs, and prepaids. Closing costs are all those things that are associated with fees that are done for services for the loan, or I should say fees that are charged for services for the loan, such as the appraisal, the title company, and that's a large part of it, the title fees. There's also, the credit report and the flood certification, and just a laundry list of things that go into that. And that can often be $3,500 to $4,000 or more, depending on the price of the home.
Wow.
And then you've got something called prepaids. Well, we've got to make sure that home's insured, so we need a whole year's of insurance up front. That can be $700, $800, $900 or more. And then you've got a couple of months worth of taxes and insurance that has to be built into an escrow account, so that the lender has that money to pay on your behalf when those items come due. So we've got down payment, we've got closing costs, and then we've got these other things called prepaids, insurance, and escrow money. And then of course there's odd days interest. That's a minor item, but it comes up. If you close on the 15th of the month, when do you think you start paying the interest to the bank?
Probably the 16th if I had to start
You got
guessing.
it. So you got to have 15 days worth of 16 or 14 or 15 days worth of interest at the closing table. And that can be sometimes $100. So there's a lot going on there with what we call sufficient funds to close is really probably the broad topic. And within that is the down payment. The other items can come from the seller and often do.
Okay. Well, thank you for the clarification. That's
Sure.
a lot of good information. So down payment and the money stuff, there's certainly a lot that goes into that. So we appreciate your time clarifying and talking a little bit about that today.
Thank you.
Thanks, John.